You have to have the willingness to adjust based on like what the market's telling you.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Mike, thank you so much for joining me today. Super excited to chat with you. All right, Mike, you're the founder and managing partner of Six Man Ventures, which is an early stage venture fund focused on Web3. You've invested in over 100 companies, managed over 200 million AUM. Previously, you worked at places like Disney, Google, Venmo, and of course, you're the founder, or former founder, I should say, of the crypto media company, The Block. All right, Mike, tell me, how did you decide to start The Block? Because, Google, Venmo, I guess Disney a little bit, but that's not really media. So why did you decide to start a media company?
Yeah, absolutely. So crypto, has been fascinating to me since, I discovered it in early last decade. I was working in fintech at the time. As you said, I'd worked at Google Wallet and Venmo and PayPal, but basically felt like fintech was sort of like putting lipstick on a pig, taking existing rails that have been around for decades and slapping good UI UX on top of it. So I had this kind of like draw, had purchased Bitcoin, more than a decade ago now, and so I'd followed the markets and was extremely interested in what the network represented, basically an alternative to, these, I was working at PayPal at the time, these really large conglomerates, centralized, high fee intermediaries with the ability to censor merchants. You were hearing, it's a perpetual thing, hearing complaints about these big intermediaries. So the allure and the appeal, the draw for me was really strong for about 5 years. The challenge for me was I'm not an engineer. And so looking at crypto, it was kind of overwhelming to think like, how can I contribute in this ecosystem or this industry? It's weird to call it an industry, but basically the space that's so intellectually interesting. At the time, in 2017, 2018, the primary things that you could do were investing, right? And investing really meant like liquid tokens. So I had never been a venture capitalist. I'd never been a liquid public markets trader, hadn't participated in financial markets. And so I didn't have a background that made me, likely to have any sort of edge or ability, to kind of win in those markets. And then I'm not an engineer, so the things that were being built were still largely in that era, 7-8 years ago, like foundational protocols, right? Some of them serious, like Bitcoin and Ethereum, and some of them, not so serious, like Bentacoin. And, I didn't really have an idea or, again, any sort of edge on what I could build or contribute from a protocol perspective. But what I found is, as I was doing sort of a canvas in Q4 2017 into 2018, kind of what was missing in the space, it was sort of a basic understanding of how these networks worked, what use cases they might enable in the future, the problems and challenges, and frankly, general kind of like business sense on how to build and attack markets. Again, you had a lot of financial markets folks and engineering savvy people, but maybe not so much company builders. So, set out and said, I think what we can do is, I think the original tagline for The Block was crypto simplified. And it was just, how do we, the average person who goes to find out something about crypto is going to Google and, find 10 different contradictory answers on what Bitcoin is, what Ripple is, XRP, Ethereum. How do we kind of bring some level of research rigor to information? So, now it's a very popular structure to have research and some level of like journalism and analysis under the same house. Back then it wasn't, right? You had Cointelegraph, CoinDesk, or some other publications, Bitcoin Magazine, but there wasn't research side to it. So we sort of were one of the groups that pioneered the model. You see Blockworks, Delphi, and others who started around the same time doing that as well now. So it was a lot of fun. Got to work with some brilliant people. And what was really cool is most of the folks were not, there were a handful of like professional journalists, young, like really, elastic of mind. And again, this is something we carried forward, like to this day in everything I look at in crypto. And then the research side, again, it was just really young, curious folks for the most part. What we found is, I know it's like not PC to say, but it was like the older the folks were, the more entrenched in their thinking, the more skeptical and elastic, and likely to really understand and present things in a compelling way, in an insightful way. So anyway, we had a lot of fun, but being in media and crypto, it's a really tough business, right? So at the end of the day, you need to employ a decent number of folks to produce really good information, and the it's really difficult to do that while effectively having to sell ad space or research subscriptions or whatnot to the folks that you're actually like reporting and writing on, and stay objective. So anyway, I sold that business after about 3 years, and then moved from the information flow to the money flow and became an investor.
Very cool. Okay, so Six Man, what was the catalyst where you were thinking, okay, I wanna, I'm obsessed with this space, I love it. Media is not the ideal business model for me. I want to be full-time investor. So tell me about the catalyst and the start of Six Man.
Yeah, absolutely. So to that point of, I never started a media company, but I knew that innately, like, if I followed my interest and my capabilities at sort of storytelling and bringing people together and explaining things, I'd likely have success. So, like I said, in 2017, 18, I didn't really see how I could be a good investor, because I didn't really understand the space and the primitives well. Fast forward to, it was actually more than 3 years, it was 2021. Fast forward to 2021 when I sold the block, I started to realize, so a big thing happened during that 3 or 4 years is that a lot of the activity in the space moved from that sort of foundational infrastructure layer, to the app layer. And again, fast forwarding now, 4 years later, I feel like we're still having some of the same debates. Hey, is there too much infrastructure? Are we focused on scaling, and not providing useful apps? But again, back up 4 years, I think we had the first versions of some of the things that we're seeing today, and initial iterations of building useful things on blockchains that weren't just purely money. So those things included NFTs. In the 2020 period, became very, very interested in NBA Top Shot, for example. And so, followed my interest there. My partner in founding Six Man Ventures, Serge Kasarjan, I've known since college 25 years ago. And I were really, collecting these NBA Top Shot cards, which were effectively, I collected baseball cards as a kid, but it wasn't it was social in the sense of social for the folks around me, or occasionally you go to a baseball card or card show and you meet some other people, but you just kind of like have a one-to-one. Cool thing about NBA Top Shot is basically everybody, and look, this changed over the intervening years from when I was a kid to an adult, and you had eBay and you had global marketplaces, but still a lot of friction, in many ways to transact, and high intermediary fees. NBA Top Shot sort of came out, and like instantly you could trade, with these like digital collectible cards, basketball cards on a blockchain, limited edition, really social. You could be chatting with people in Discord or Telegram, and you could trade with anybody globally, like instantaneously for pretty low friction. So start doing that. That was the gateway to NFTs. Beyond that, so the next iteration was like these profile pics, PFPs, as you know, and your listeners know. And so got really into that, include as well as art, right? So I got very into art blocks and generative art. I'd never been an art collector. I'm not somebody who like collects things. You can see the wall behind me is blank, much to my wife's chagrin. But this notion of like these things that you could kind of like buy, and it didn't take up a lot of space, but were beautiful and interesting. I mean, just had a lot of fun in that 2020, 2021, and into 2022 period. So in investing in them myself, one, I was having a lot of fun. Two, I was actually making a decent amount of money because I was quote unquote early. And three, I was just like, wow, this is like transformational, and we don't need for 5 years, or 4 years, been talking about the things that make it transformational, like global markets, liquidity, and move instantaneously, provenance. Like we could talk about all the things, IP ownership. And I do believe in those things. So I'm not, but the point is, it was really eye-opening, and a really cool proof of concept on what blockchains can enable. And in investing personally, friends would see it. They'd say, "Oh my God, like that's so cool. Like, what's that thing? What's your new, profile picture on Twitter?" And oh, and by the way, like it's going up in price. I'm reading headlines about Bored Apes and this and that. And so Sturge and I started investing on behalf of some of our friends casually. And then, maybe 3, 4 months later, we were like, oh, wow, we have access to all of, so one, we love this stuff. We think there is money to be made. We understand it. And people are interested in giving us money to do it to invest on their behalf. That's one of the biggest things investing is you have to have some edge, insight, or advantage over people. And at that time it was access, being early, taste, being in specific circles, and so and then knowing when to sell, because the biggest thing in crypto is how cyclical it is, and things go up and down. So by doing it personally, then for friends, we said, hey, why don't we start a fund? And we kind of earned the right to do that. Our first fund was pretty small, it was $7.5 million. Within a year, we were able to raise a second fund, much larger, $140 million. And the thing that we tried to do in that first year, 2021, with the first fund, was just write these 100K checks into things that we were really interested in, not really deviate from the check size very much, maybe a little bit, 25, 50K here and there, up or down. And so it was a pretty broad portfolio, but we were really confident that we were like super early to something that was really transformational, which was again, global liquid markets with very low friction, theoretically low fees. I mean, OpenSea was charging 2.5% at the time. And I think fees have compressed for sure. Royalties were high at the time. Royalties have compressed. But also, in addition to that abundant market, there was also scarcity provenance. And so it was super, super exciting. Some things that haven't been fully realized yet, like IP around the things that you own. So you could kind of like own the overarching brand. And so anyway, we did something like 75, 80 investments on that first fund. And some of them have been very successful, and they were in that app vein, right? The Magic Edens of the world, things that people like need to use blockchains. Etherscan, which you basically, like many people, need as a UI to like read blockchain data. We did, I think you might have, like, we invest in StepN, Move and Earn, that has, I think, spurred a lot of other very similar models about doing things to earn rewards. So we just had a lot of fun, and it got us to that next fund where we sort of leveled up into a professional investment firm.
Amazing. Okay. So is it fair to say, well, it's funny because, we're talking a lot about consumer, and a lot of the investments you made are consumer oriented, but you guys are multifaceted. You guys don't just do consumer. So how would you define Sixth Man's investment philosophy? Is it just like, we're a consumer Web3 fund, or is it, no, we're a Web3 fund, we invest in all of this?
Yeah. So the way we describe ourselves most often is just, look, we're an early stage crypto venture capital firm investing primarily at the application layer. So, applications can be anything from, consumer, meaning trading, speculation, memes, NFTs. I like to say, like, the party in the back, business in the front, party in the back. So that's sort of the party speculative fun stuff. And then all the way to the super serious applications, which could be stable coins, payments, DeFi, things like money markets, prime brokerage. And so those are both consumer and business applications. So we invest across the application stack, from the super serious stuff, as I said, DeFi, stablecoin payments, DePIN, but then all the way over to like trading and speculation, social, gaming, and fun. And candidly, like, I think, so there are definitely firms that specialize in one or the other of those, firms that specialize in not even investing too much in applications, but mainly in infrastructure. And I think those are really important things. But yeah, we're more kind of like general purpose across the ecosystem. The goal here is like my true north since I joined and started the block was like, how do we go explain this to more people, invest in things that bring this technology to more people, and show them, that blockchains like can be useful and have a purpose.
Very cool. All right. So I have to double click here because, it's crypto, and saying you're in crypto venture can mean like 50 different things. So are you guys investing in companies and tokens, or just companies, or just tokens? And, is it just like pre-seed, seed, or like how is it, Like break that down.
Yeah. So we invest pre-seed to Series A. And I would say we do more pre-seed and seed. So probably 50-50 between two in terms of number of investments, which means more dollars to seed because those rounds are larger. So, the most dollars go to seed out of any category in our portfolio. And then I would say equal amounts to sort of Series A and pre-seed, but that means we will have more pre-seed investments in Series A. So we skew towards very early stage and private. And so what that means is, we're not really buying like SAFs from people. We're not buying too many public tokens. We do have a few in our portfolio that we've bought, that we've purchased. But primarily what we're doing is we're investing as a lead, co-lead, or large follow check. So not like 100K, but substantial follow check that's not going to throw a large check around. But again, we prefer to lead into private companies in those categories that I was talking about, those application categories. And so basically the consideration is, or when you're approaching an investment, those stages, you're saying, I think this entity is worth some amount. Okay. And clearly we try to keep the consideration like almost like roughly the same in terms of, so we want to invest in equity in every business or a safe, which has a conversion to equity. But we want to invest in equity in every business that we invest in. We've just seen through the great history of applications, the decade plus history of applications in crypto, a lot of value accrues to the equity portion of an entity. Like look at Binance, right? Like BNB is worth, I don't know what it's worth today, 60 or 75 billion. I'm not sure exactly what the number is, but that equity in that company is worth hundreds of billions. So, and that's true of many businesses. Look at Uniswap, the token's worth X, but certainly there have been a tremendous number of cash flows that have gone to the equity. Okay. And again, I don't know if they've paid those out to investors, but the point is there's value in both. That's true of DePIN as well. You see the token's worth something, but then the labs entities or portions of those DePIN protocols, typically the first user of a DePIN protocol is the entity itself that was invested in. That's true of HiveMapper, true of Helium, true of many others. Okay. So we want exposure to the entirety of the economics that might, accrue down the road. It's hard on the day of early stage investment. Often the protocols are either not live, just getting launched very early, and often areas that are completely nascent. So you don't know how much value is in equity versus token. So we'll typically have what's called a token warrant associated with the equity investment. To keep it simple, we like to keep that ratio like roughly in that 1-to-1 area. So you get X amount of token, and the same amount of equity from a percentage ownership perspective for Y dollars. It just keeps it simple. Sometimes a ratio, depending on the progress, or if it's more of a token model, might differ a little bit. We typically want exposure to both. And we have since, we started investing as a lead. We set terms. We've been doing that since 2022. And what's been fascinating is it really matters. In other words, there have been times when we thought that a business would accrue a tremendous amount of token value over a long time horizon. And I think when we started the fund in 2022, we said, hey, the bulk of our returns will likely come from realized token value. And that's still very well likely is going to be the case. But on an individual deal basis, it's been fascinating to see, an entity, for example, that was going to launch a token gets purchased prior to launching a token for equity, by a bigger protocol, or gets purchased for equity and tokens by a bigger protocol. So you need to have exposure to both to realize value. So we've had multiple cases of that happening. It's a really weird thing. It's hard to explain to traditional investors. A lot of our LPs are folks who have invested in traditional private equity, traditional asset classes, they're fund of funds. But everybody likes returns, and the VC asset class in crypto has in aggregate performed pretty well from a realized DPI or actually value return to investors over the last 5 years relative to traditional venture.
So that preference for leading is because you just want to be protected in terms of the legalese and the documentation and the value accrual. You don't want someone who's maybe a non-crypto native leading, doing a safe only and leaving out the token warrant. Is that kind of the idea?
Yeah. I mean, so the preference for leading is really about the firm's strategy. So our strategy is, look, we target 10% or slightly greater ownership in a company, right? And that could be a company plus a protocol. Obviously, we have many investments where we own less than that. We have a handful where we own more than that. We do think, by the way, if there's a token network and like a single investor, for example, owns like, call it 13, 14, 15% or more, that can be pretty problematic because when they need to exit their position, you have like multiple percentage points at a time of the protocol that needs to be sold. And that can be pretty challenging. So anyway, we think, healthy numbers or call it, and what we target is in that, call it like 10% range. So that's, I would say, more the true north than, anything about like, that's our business model more than having a preference for other people, you know, negotiate terms that we don't like or don't know what they're doing. We did see a lot of that, by the way, in 2022, and we did get burned by bad terms being negotiated where we were a follow check 2021, 22. So we did sort of take the reins. But the other thing is crypto as an asset class, and it's not even about the people. It's just about some of that uncertainty around tokens and equity and structures and foundations and the regulatory cruft that we have dealt with for the past 3-4 years. It's been tough for founders. I definitely will give them that in terms of it also, exchanges and market makers, saying, hey, you need, your cap table needs to look like this, before we can list your token or do this and that. They're just getting pulled a lot of different ways with their consideration value. It makes it really challenging. And so because of that, it's important to protect the entire investor class's interest when the founders getting, pulled in a bunch of different ways. And you need somebody who has the firmness in my mind. And we've seen this, evidence-based. We've seen this where we're the lead or others are the lead, where you need a strong investor with some governance rights to ensure that investors are fairly represented. It is not as cut and dry as it is, traditional venture.
Totally agree. All right, so I assume I know the answer here because you're focused mainly on the earlier stages. But when you're looking at I guess which factor do you weight the heaviest when assessing a company or a startup? Is it the team? Is it the market? Is it the product or some other factor?
Yeah, so it's always been going to be team. Like it's like bad team, good market doesn't matter. It truly doesn't matter. And good team means a bunch of different things, right? It means certainly like a high level of like talent and deep insight, and maybe have figured out or unlocked a secret. But even that's really hard to tell. Like for example, the pre-seed stage, it's much easier, at the A or at a robust C. So like what we're looking for is like passion, like clarity of vision, and persistence, right? So, and basically persistence is the one in crypto that I think like 4 years in my own experience, being a founder, and we'll talk about some things like we talked about the block, but LinkedIn, still going strong 3+ years later. It's not been easy, building, a product in the physical markets that also has like an NFT attached. So what we're always looking for is founders who have like persistence, and then this like optimism and then a deep insight. The last thing I'll say it's so easy to like say, but it's like I know it when I see it, is are you crypto native? Like we just consistently ask that, and it's like it's been pretty much the number one indicator of success. And if we're to look back 4 years now, crypto native can mean like pump.fun founders who were themselves in the trenches before launching their protocol to, we invested in an incredible stablecoin business banking product called Dakota, where, the founders have worked at Anchorage and Coinbase custody. So it can be suit and tie, and this is an over exaggeration, all the way to Gen. But again, do they have that crypto native sort of like DNA? So we really do look for it. And I understand I had said earlier, hey, there are no experts, right? And that's kind of true. But I think that at this point in 2025, it's reasonable to ask and to expect that a founder who's building something that you're going to back, like at the application layer, has like a year of experience directly building in crypto and wasn't true maybe in 2019, 2020, 2021, but I think now it is. Or has like really been using the technology personally, again, like I have before I started the block, before I started Six Ventures, and is just so curious and therefore has had an insight and you can already see it. But again, if you haven't worked in crypto, like I want to see a working product before I'm interested in investing in you.
And are you assessing these qualitative traits just from continuous conversations? Are you like, hey, let's just talk to these people so much that we get to know them and we pick up these little pieces here and there?
Exactly.
Is it just exposure?
It is. It really is. Like I wish there was some magic formula, and like like it is funny when I watch investing podcasts, and I do, and I'm like, that makes a ton of sense. Or I'll see like a really great tweet, and I'll share it with our founders, and then they'll like rip the logic of that like really well done tweet to shreds. I'm like, you're right. Like there's just, hey, maybe I'll be replaced by AI in the next decade, and like we'll just press a button and or we'll know what to invest in. But that's not the case today. There's just so many variables. We just talked about all the different characteristics of team, and that's just one. Then there's market. Then there's value accrual. It's just, and again, value accrual could be different for two people doing the exact same thing. We've talked to some wallet teams that are just terrible at explaining like what they're going to do. Like couldn't even explain like basic like swap fees and like how really good brand name great wallets, and then others who are just like geniuses about how they're going to leverage that to basically abstract away the app layer and almost like create the wallet as the entry point in the super app. So a lot is about like value accrual, but to your original question, you ferret that out at the pre-seed and seed through conversation, through looking at product, through documentation, give you some references, but yeah, it's a people thing.
I found that being able to speaking to a founder, and if they have very detailed knowledge on what other market participants or other people in their specific sector are doing, and they can talk in great detail about that. I don't know. In my opinion, that's been a pretty great signal for us. But
yeah, I'm with you. And then confidence is another one in terms of like certainty of, to your point on like, if they can assess what's happening in the market and why something is good or bad or going to work or likely not going to work, I don't have to agree, but I like when they have like a really strong perspective and point of view.
Totally.
Again, we've seen that like sort of like certainty, but willingness to listen is a really strong indicator of success.
All right. So how are you sourcing these deals? Is it just through your personal network? Is it through, Twitter? I mean, you have an incredible presence online, so maybe that's your primary vehicle for sourcing.
Good question. So the biggest thing is that, and I think this is true of every like really good private investment firm, is it's an entity and there's a partnership, right? So it's not just one, because that's just me. We have 4 partners and additional investors on the team who are fantastic, all have different styles, all have different approaches, but we can kind of unite under a brand. So, to start, we try to keep pretty consistent voice on like what our brand is. So 6MV or 6 Ventures, we're approachable, we're founders ourselves. So basically we're putting that like kind of like beacon, we invest the app layer, we're putting that beacon out into the world, like we've built companies. So, and, so the top of funnel is then marketing that, and the different channels are, as you mentioned, there's social media, there's speaking with folks like you in this environment, which is great. There's getting out and meeting people at events, speaking at events, and then meeting one-to-one. And then there's your existing reputation and founder base, which is just so critical, as in private investing. How are those folks behind closed doors? We had an advantage in that first fund. We did get to work with, and we still work with 70 plus different projects, which was a really great strategy in hindsight, to get really good exposure and surface area. So basically you have that brand, then you have different styles. So I source, personally, you have to stick with the style of the individual. I source a lot through, as you mentioned, these public channels, whether it's Twitter, whether it's Telegram, larger groups, but I try to just have a strong voice that is approachable for the people that I'm trying to signal I want to approach me. You know what I mean? Like I definitely have strong perspectives, and I'm disagreeable to some people and agreeable to other people. And I'm clearly trying to signal that. And I think other good investors I look at do that as well. Okay. But our style as a firm is to be very public. There are firms that are very private. It's the name on the door maybe has a little more longevity. It's been around for a decade or more. Like that's not us. We're a scrappy upstart getting our voices out there. So anyway, to get back to it, it's a lot of that like marketing, signaling who you are, and then it's your first degree network. So it's founders. We have a big LP base, meaning investors in our own fund. It's larger than most funds. It's intentional as well. So we have a really good network around us. And then just working in the industry. So working in the block, I met so many people. So have this network, but it's a very, very people driven business. So it's about putting yourself out there. Our strategy is put yourself out there and make yourself approachable. And then that builds both a direct line to you and a second degree line. What we don't do that works. So our strategy might not work for other firms. It wouldn't work for many others. And their strategies wouldn't work for us. What we don't do is we don't have analysts who are calling up, going through Crunchbase or whatever PitchBook and looking at who got funded, or looking at literally like every company that's gone through a hackathon or this, that, and the other thing, and just reaching out to the founder to pick the brain kind of thing, or hey, tell me about the market. There are firms that do that and do it clinically, and I think effectively. It's just not our style. We're very, very personable, relational, firm.
That makes sense. All right, so could you talk to me about your edge? Like, when you're pitching 6-man to some LPs, how do you categorize and bucket that edge as kind of a one-liner, or not a one-liner, but a paragraph?
Yeah. So the edge is that we're users of the technology who have historically been able to both build in areas of high value and invest and discover areas of high value and then realize that value. So like from our first fund, we've already returned more than the money that was invested in the fund. It was a 2021 vintage. So that's impressive to LPs. We've done that in our personal lives. So again, we know how to like spot these things because we use the technology. We love it. We enjoy it. We build in it. We've created value that way. And then, on the flip side, we've also done that, through investing. I mean, that's at the end of the day, that's like truly the biggest thing that matters to people is, can you, spot, invest in, support, and realize value, in companies or entities. So that's number one. But then, how do you get that edge? I think we talked about it. It's again by being a user, by being very, very like in the market and social. That's our strategy. There are others, but and then I think by defining ourselves very much as app player investors, and the last one is by not being, while I might talk a lot about Solana, we invest in the Ethereum or EVM ecosystem, we invest in the Move ecosystem, and then we invest in a lot of different applications that, particularly like DeFi, that can work across multiple chains. Okay, so not buttonholing ourselves, and just because we're a smaller fund as well. The last piece is like, I don't need to invest 10, 15, $20 million into a project or get 15 and 20% ownership to move the needle because our fund size is reasonable. So I can lead or co-lead. That, when you're talking to an LP, resonates because they're like, oh, well, it's easier for you potentially to win deals because you can structure around, that maybe is a little bit more appealing to a founder, particularly in crypto, where founders really do often want more perspectives than just one on their cap table.
Yeah, I think crypto is one of those weird ecosystems or markets or spaces, as you mentioned before, where it's like, in order to outperform, especially in venture, you just have to be immersed. You have to just be using everything. You have to be talking to people. You have to just be in the chat rooms, etc. And I don't know of any other. Also, granted, I haven't been in other venture ecosystems, but I can't imagine like space venture investors are like at the Space Factory or at SpaceX or whatever, or other ecosystems. Crypto is unique where you just have to like dive in head first, and then you through immersion you kind of learn about things and figure out what's needed, what's not needed, etc. And that kind of guides your process. So very, very interesting. All right, so is there a vertical? We talked about consumer a lot, but is there a subsector of crypto that you are particularly excited about that you think going forward is going to be massive? For example, like DePIN, or you just like, I don't want to make any claims quite yet. I'm still kind of searching for a different. I'm open to all.
Yeah. So look, I think that DeFi, if we're just to get back to so Bitcoin came first. It was, sort of a store of value. It's, non-sovereign money. And people get that use case. So that's investable by investing in Bitcoin, right? Like that's not a venture asset class. But the next one is like financial markets. And you see both Ethereum and Solana, the two biggest ecosystems. I guess Ripple's up there as well now, and they just bought Hidden Road, which is a large prime broker. And so you have these like what we Solana is internet capital markets. And I think that notion of capital markets, which is a mixture of DeFi and CeFi, but I think it will largely over time as the markets get larger tend towards DeFi. Is we're extremely interested in investing in areas of bringing new assets like RWAs, right? But like bringing new assets and asset classes on chain. So we'll invest in issuers. You'll invest in places where those can be transacted and exchanged, and then there's money markets and different places where you can kind of use them as collateral or yield, etc. And then there's this notion of extending, call it like not just this like stable coins extend the USD like out in the world, but like bringing like working, functioning like financial markets to people everywhere, globally in emerging markets. It's like, somebody in Ghana can have access to the same, market that I might in Connecticut. I think that's really interesting. It's promising. And we're starting to see as you can see it with like stable coin issuance growing. That shows that there's like more capital that is coming in, like being put on chain for some purpose. And in many purposes, it is in many cases, it's for generating yield and access to, perhaps even better than banking, or for folks who don't have access to banking, financial services. So DeFi is one. DePIN's another. The notion that look at just basic markets, mapping, Hive Vapor, mobile, Helium. We're investing in Dawn Internet, which is broadband access. There are a bunch of energy, DePINs, but the idea that there's these AI compute and AI data DePINs, but the idea that a distributed group of supply can potentially compete with centralized LMEs in specific markets, incentivized by sort of tokens on the supply side. But so I'm very optimistic on these networks, and their ability to generate supply demand. I think the challenging part is how is the value going to be realized to the investor? There haven't been too many examples yet of DePIN tokens that accrue value. I mean, there's obviously different burn mechanisms. There have been proposals that like fee accrual to DePIN tokens, but again, I think there's still just been a challenge historically in the DePIN sector in terms of does too much value leak to the equity owners. By the way, in the long run, that may not be a bad thing, meaning there could be multiple quote unquote labs entities on top of some of these protocols, providing services with this open supply beneath it. And then going out and finding and selling demand, selling to folks who want to interact with the protocol. But so I'm interested in that category. I'm just not sure kind of how to invest in it and where the value will accrue. The last one, that I'd say is, I guess DeFi talked a little bit about stablecoin and payments. So the last one is, look, I think people are going to have fun and speculate on chain. They've been doing that since the beginning of time. That genuinely is like been the biggest use case for 15 years. Bitcoin was for speculation for a number of years, but the price just kept going up, and this sort of store value that increased over time. Long-term store value, I guess, was what some people call it. But most of the revenue in crypto to date has been generated from like trading fees. MEV, I think it's like a distant second. So I mean that's the business model. People like to have fun and speculate, and they're going to do that across so many different asset classes. So that's another one we're bullish on.
So you mentioned kind of the DeFi and how you're very bullish on that sector. One of the thoughts I have, I was going to say concerns, but it's not a major concern, but it's just something I think about is that will crypto evolve in a way where the incumbents, like, and this is great to ask you because you read Venmo, PayPal, et cetera, where the incumbents are just going to integrate these different products and protocols and just plug it in, and distribution will end up winning the day? Or do you think that we're going to see a lot of crypto natives become the next kind of incumbents?
Yeah, it's a great question. I think both, right? Like, so when I say apps, like, if Robinhood, for example, plugs in on chain, which they've said they will, they're definitely going to do. You imagine they'll try to do some things in a proprietary manner. I think they've partnered with the consortium to issue like a stable coin, I believe. You'll see, and you see banks announcing they're launching stable coins and things like that. But you'll also see some of these incumbents like tap into the core native primitives, things like on Solana, it could be like Camino on Ethereum, it could be Aave. And so, tap into those money market protocols. So they'll probably, slap some economics to themselves on top of it. And, I guess that, and by the way, that happens already today. If you look at how centralized exchanges work. But again, people are still getting access to a really compelling, underlying protocol and product and set of applications. At the same time, there's going to be net new interfaces, just as there were in fintech, right? Venmo was net new, Cash App / Square. As I said at the beginning of the conversation, those were like lipstick on a pig, meaning using the same underlying rails. Like the beautiful thing here is like you are utilizing public blockchains, like new fundamentally underlying rails. I love it that, for example, Stripe, which I guess now we would call part of the old guard, they're 15, 16 years old, bought Bridge and is using blockchains for stablecoin infrastructure and products. And, there are going to be millions and millions of companies and individuals, tens of millions, hundreds of millions eventually, using products that they bring to market. Like that's very, very bullish for the underlying networks because all their protocols or blockchains, there will be usage and fee accrual, et cetera, despite the fact that the user at the end of the day, maybe is interfacing in a way that they don't know. But then there will also be like brand new, net new interfaces, things like out of this cycle, some of the biggest emergent winners, Pump.Fun is, they have a mobile app now, they want to create something that's, call it competes with Facebook and TikTok, that also includes money, right? So they're making a big creator push now, and that will be net new. Jupiter is a net new financial, product interface. Phantom, net new. It's a different kind of wallet than Venmo. And then Hyperliquid, it's an on-chain, exchange. There's some aspects of it obviously that aren't fully on-chain, but it's very different than a Stacks. It's different than traditional financial products. So there'll be a mix, and I think both are bullish and exciting. But if the native products aren't sustainable, that would be problematic, right? I really do believe that if we had what happened last cycle, where the quote unquote native products like BlockFi just like go out of business, like that's not good for anybody. FTX like going out of business, that's a big L. So right now it feels like we have some multi-cycle products, Magic Eden, Phantom, MetaMask, like in the wallet. You have some new, like Jupiter, you have some new brands and products emerging, and I think that's really exciting.
When you're advising companies on the tokenomics, is there an ideal model that you push people towards? Like, hey, everyone, what we'd love for you to do is do buy back and burn, or this model, or is it kind of like very dependent on the actual product?
Yeah, it's so dependent on the actual product. Yeah, in fact, I think folks who had really strong perspectives that like, hey, DPIN should operate on this, I've just seen, or file storage should have this token model. I've seen a lot of like mea culpas. We've seen it with just the L1 protocols themselves. Like what's the narrative around each? Why does it have value? So, I think you have to be flexible of mind and very protocol and business model specific. And then you have to have the willingness to adjust based on like what the market's telling you. Like, do they value this as value in a way that you thought? So yeah, there's I think my partner Carl would have probably a smarter answer, like really assessing and analyzing. He's got much more of an engineering mind. The different models, like buyback and burn, and different modes of fee accrual. Yeah, whether it be to stakers or others. But well, I'll just leave it at it's very, very product specific.
Do you have specific thoughts around DAOs and kind of on-chain governance? Because I was such a strong. I was like, man, this is going to revolutionize the world. Like, we don't need corporations anymore. This is the future, et cetera, et cetera. And then I was like, okay, a year in, I was like, oh, this actually doesn't work that well at all. But maybe you have a different opinion.
Yeah. So the biggest thing is we just haven't like really explored the surface area of DAOs like in any meaningful way. So I would say a couple of things. Are just not enough market participants. There's not enough at stake in most protocols, like to get any like real long-term discernible learnings. I do think that putting governance into incentive-driven systems is like extremely, extremely powerful. I also think that like a lot of the experiments that have been done to date with like everybody gets a vote and this, that, and the other thing, like those are very rough and primitive and haven't historically worked out. And then on the to get the incentive point, it's just been again the scale or the ability to like kind of manipulate or control DAO governance. The hurdle to that has just historically been a little bit too low, and then the decision making often isn't as like rational as you'd want it to be. There's like not like there's not really standardization of like how information flows out about proposals and what it changes and modeling and we've seen this even as far up as like Solana's inflation proposal recently. What happens is we just have such a limited set of participants still. They're very passionate and in many cases tribal, that like the decisions just aren't made. And that I've seen like largely in DAOs, the decisions that are made become too emotional. And then having the DAO structure is often like a weight around the project itself. It's just really difficult to be nimble in brutal, challenging markets with some of these governance processes. But you see Aave and others like starting, I think, to do it, to do things like more effectively. And I think as we get more market participants over the long run, certainly like DAOs will exist. And then I'm not sure if they'll truly be like decent, like autonomous. I don't know what we'll call them in the long run, but sort of incentive weighted governance is pretty powerful. I think will be powerful with more market participants, more value at stake, better, more structured information flows, and transparency.
Yeah. Do you imagine that the on-chain governance process will get standardized, or I guess head towards standardization as we get hopefully some clear regulation here from the new administration?
Yeah. So I don't know that the two things tie together. I just don't know that there's any like bill. I'm not aware of one necessarily that specifically speaks to, the notion of DAOs. But I think just, clarifying that non kind of like company entities can exist and have tokens out there that are fee or revenue or otherwise accruing. That's like a necessary precedent to like actually having meaningful on-chain governance where everybody can participate. Like you're never going to have a good governance system, for example, if like the people who use the protocol but live in the United States like can't receive the token, and like it's so everything's just been so warped by things like that to date.
All right, so you yourself are a two-time founder now because the block and also six man. A lot of folks kind of don't really understand that founding your own investment firm is similar to founding a company. I would say in terms of the process and the intensity. But when you're building out your team at six man, how are you? What are you looking for? Are you looking for deep crypto natives? Are you looking for TradFi folks? Or some other category, or what are you looking there?
It depends. I mean, so the first folks have to be like deeply crypto native. Like you just have to start there. But now like we're at a firm size where I think we have that, and then you can start to layer in specialty and like call it like real domain expertise. So things like operations, IR, investor relations, legal. And again, with all of those, I'd certainly love somebody who. Oh, and then like things like liquid markets expertise, as a lot of like our investments start to become liquid and have more size. So you need to have domain experts as you grow as a firm. Uh, Whereas like when we started, it was just like me and Serge, and we were generalists trying to do everything like entrepreneurial. And so now we look for. I do think being a crypto native is like a prerequisite. It would be shocking if we hired somebody who hadn't operated in crypto markets. That's one. Two is just our firm's culture is like default personable, like outgoing, so, we're not, it doesn't mean we need to have like a monoculture where everybody's the same personality, but we'll probably default towards that. Um, yeah. And then like you just look for openness to new ideas, creativity, and again, resilience. Like you mentioned it yourself, but it's, starting a firm is like we're still a challenger firm. We're less than 10 people. And we expect to be at it for a long time and build an enduring institution that founders and investors and LPs and the entire ecosystem can depend on. And there were some great there are beacons for us to build towards, the A16Zs of the world, the paradigms who've been around longer than us. And so we'd love to kind of like build institutions that are enduring. And so the challenge was just trying when you hire is trying to figure out what's not only going to be important today, but what's going to be important in 2 to 3 years. Cause like crypto moves so fast. When we started this fund in 2022 that we're investing out of still today in 2025, completely different set of companies, market structure, issues, regulation. I mean, it's just wild. So yeah, the biggest thing, I do think being crypto native and knowing and understanding that uncertainty is the key underlying characteristic, not only of the founders who back, but in the people that we have on our team.
If you could have a magic wand that would improve one process on the administrative kind of back office side, what would that be? Whether it be like tax, audit, fund admin, et cetera.
Yeah, I would say the sort of audit and valuation process is still somewhat archaic, but understandably so. I mean, if you are an auditor in the space and you saw what happened with the 2022 class of blowups, you're going to be pretty rigid and inflexible. But I think like a lot of those processes still, look for like more very traditional comps in a market where just things aren't valued in traditional ways. So that's one. But and that also does kind of like fund admin and tax. So I do have a lot of sympathy for fund administrators who historically have just had to deal with, for example, equity consideration, and now have this token consideration that for many, if not most firms, accounts for more of the value than the equity. And it's like, well, how do we account for this? Do taxes on it? Realize, distribute. So we'll have to work with like multiple vendors, to get what in a traditional fund would be one basic function done. So I think as the scale of the private asset class grows, I think the providers over the next 3 to 5 years will up level in that respect.
Is there a big business to be built there, or you think that the market's just too niche for people that invest in crypto, whether it be institutional investors or kind of crypto native funds like us? Is there a big business within the accounting audit kind of space, or not really?
I would think so. But yeah, the asset class needs to grow, right? Like it needs to be not a sub 3 trillion asset class. It needs to be, a 20 trillion asset class. But yeah, I think that like the velocity of trading, even like, so you need the size of the asset class so that there's like substantial firms that can pay fees. But I do think like the velocity of what happens and the amount of trading and number of tokens and complexity, yeah, I mean, it just needs to grow, and you need to have more profitable firms. There's if you and I could name the, call it 50 private entities that are pretty darn profitable and successful, um, then maybe it's not a massive market. So I think the quality of the service providers is fine, but it will be better if there's more profits and we can pay people more to get higher quality. Like a lot of the service providers we deal with are, not crypto native, don't understand the industry. Like we spend a lot of time educating them on how to do their jobs.
All right. So 10 years from now, you're back on the podcast. Where is Six Man Ventures?
Yeah. So ideally, we are investing in a way that, we don't have to necessarily call ourselves like a crypto firm per se. We're investing in applications that leverage, call it like public networks, right? These public, open, permissionless networks. Like if you in the late 90s, early 2000s, there would have been like, internet funds, internet VC funds, like things like that. And now it's just like back to being like VC. I think that's probably like how it'll be. But, because we have an edge in understanding these open, permissionless networks that anybody can build on top of any application type, we have an edge over, call it, more generalist crossover investors who we already see, by the way, in the space. We see traditional VCs, investing in our space. But I think crypto will continue to grow. It'll like blend into the fabric, the sort of like value layer of the internet. I haven't talked about AI, but there's a bunch of ways in which these public networks, will will matter, in a world of that's increasingly AI dependent. And so I think the way we talk about ourselves will be different. In 2021, we talked a lot about quote unquote Web3. Now we say crypto. I don't know what we'll call ourselves, but I think we'll still be around, and I think we'll be investing in world changing applications built in open permissionless networks.
Yeah, very cool. So when I introduce you next time, it's going to be just Six Man Ventures, an early stage venture fund, not necessarily a Web3.
There you go. Exactly. And then, hey, maybe at that point we'll have a little more of a liquid practice as more of the world's assets are on chain, and we understand how value flows and moves. That would actually be a prediction of mine. Is that
very cool?
I think all funds will have to have that that practice, and the markets will just in general look very different than they do today.
Wow. Okay. All right. So tell me about LinksDAO, because I know you've been working on this for quite some time, and it's incredible what you guys are doing there, and I know you're obsessed with golf. So if you can build a product in a space that you love, it's I think a lot of cool things will happen.
Yeah. So LinksDAO was out of the, call it 2020, that original class I was talking about that got me excited about investing. So the idea was, can you basically take two things that were happening at the time? This was late 2021, early 2022. This notion, Constitution DAO had just sort of come out. A bunch of people get together, pool money to buy a copy of the Constitution. At the same time, there were these NFT membership clubs that were coming out. Like there was, I think, Fly Fish Club by Gary Vaynerchuk, where you purchased an NFT and you could then have a membership at a restaurant. That's, by the way, a fantastic restaurant that opened last year and is in the same building as Solana New York headquarters. So we were like, well, let's put those two together. Hey, people, you can kind of get folks together who will govern a physical thing, and similar to Constitution DAO, and that physical thing will be we'll go buy a golf course, and the second piece was we will sell NFTs, and the NFTs will basically be the sort of membership pass that gives you access to the golf course it's purchased. That will give you sort of the governance votes and rights, and then by virtue of that sale and a private sale, you'll actually have. We did a private sale of some equity as well. You'll have the money to actually go out and purchase and operate, the golf course. And so the idea was originally to do it with one course. We wholly own one course in Scotland 3+ years later, and we're minority owners of a course that's opening in the U.S. Called Hillcrest next spring, just before the World Cup. Going to host a bunch of World Cup soccer events there in Kansas City, and majority owner there is heavily involved in that. He's an owner of Sporting KC, the soccer club there. So it's exciting. Um, the other thing is it's been a really community oriented project. And to your earlier comment, like I'm passionate about golf, I'm passionate about crypto. There's a ton of people, these like quote unquote niche interest groups are a really powerful thing. And you're going to see, I think, more of these communities spring up. There was a lot of experimentation in 2021, 2020 to 2022. I think it's fallen off a little bit. I think a lot of the communities, we were very explicit from the beginning that Linkstyle was not a speculative community. It was like purchase a membership, be part of something, govern it, get interested, get in the process of identifying and purchasing a golf course, deciding like what the rules and what things should be. It's an experiment, right? And you can participate. Anyone, anywhere in the world can participate. If you want to step off and not do it anymore, you can sell your NFT. So it's been fun. And people were doing more of that back then. I've actually been a little disappointed that we haven't seen more of these types of experiments. I think part of it is just that the NFT meta just like went off a cliff so fast. So I don't know what form factor it takes. Again, I don't think NFTs are anywhere. I think they're going to see a renaissance or something similar to NFTs that's not meme coins. I mean, I'm obviously bullish meme coins as well. I helped launch Bonk, which is a Solana meme coin, which has some of those same community elements, the community of Solana, lovers and developers and users. But there's just something about these like real world, again, niche communities where everybody can get in, they have an interest together that's powerful. But I would say so Links is doing well. Like we're going to open, as we said, the second course next year. But there have been fewer experiments in this area than I'd hoped. I think part of the challenge is there haven't been that many net new entrants to crypto, like truly on chain. The people who are using it, and you mentioned something similar earlier, are like, hey, maybe they're using a different front end and they're engaging in DeFi or getting some DeFi yield, but they're not like really on chain and like buying, NFTs and collectibles and things like that. So, I hope and I'm optimistic that people will get back on chain and start to see some of the fun of participating in these niche communities and governance. And then the other piece is a lot of them just aren't venture scale. So a lot of the funding in crypto is, on the one hand, it's just like retail investors who want to see speculative returns. And in venture, it's like, okay, something needs to be worth billions of dollars, for the model to work. So we'll need to find alternate sources of funding. And the thing that has slowed that down significantly has been the regulatory headwinds. Even us, like we got, inquiries around Linkstyle, and had to write lengthy pieces, legal pieces on why this was a membership club and things like that. And many other projects went through this, and some of them were publicized and had to settle. You just have had to be very cautious about how you could talk about these things. But I think the last 6 months that's changed pretty significantly. And now the SEC, but also more like the U.S. Congress is, I think, going to put more structure around, and Paul Atkins is actually being sworn in today as SEC head, and he's a crypto friendly. And I just think we're going to get much better guidance around just like a membership NFT doesn't make something a security. And I do feel bad. So I know it's a bit of a tangent from the original question about Linkstyle, but I've seen some of these other projects, Fly Fish Club being one of them, that had to like settle when I think unfortunately just got sort of railroaded under a different regulatory regime. So I'm pretty optimistic that as the price of Bitcoin goes up, as people see some of the speculative stuff happening and maybe take some profit, as DeFi starts to work again, you'll see money flow to the edges like it did after that 2018, 19, 20 period, 2018 to 2020 period, 2017 to 20. It was like 2021, 22 was this like creative explosion of what do I do with this, this money? And I think we're going to see that again over the next couple of years.
Very cool. All right. One more before the closing questions. AI crypto, you mentioned that there's a big crossover there. Can you tell me more about that?
Yeah. So I think right now we're focused on two areas like data and compute. So, it's really hard. Like we're investors in IO.net, which is decentralized compute. It's really hard for people to get access to AWS or Google Cloud to do their compute jobs. So, there's distributed compute where people like have machines that have excess capacity. You can pull those together into a distributed network that could be available to more folks in a much more flexible way, and perhaps cheaper over time. And IONet's starting to prove that out. So decentralized compute, that could be for training, it could be for AI inference. That's, to me, is something that's interesting and powerful. So that's a DePIN model. There's another one that is kind of a DePIN or decentralized virtual, and like DVIN, I would say virtual network, not physical, would be data. You're probably familiar with Grass Network, where people like download something on their computer. There's some others. We're investors in one called Data Hive, and basically it allows data to be gathered at the individual level versus at like sort of the higher level company aggregate level. Often folks get blocked, companies get blocked if they're trying to scrape or get access to data. But if you do it in a distributed way, you can get access to, in some cases, private data or data that will be blocked at the ISP or other levels. So those are areas where, again, this DePIN or distributed model can be pretty powerful. Obviously, in a world of abundant content, things like provenance are pretty powerful. So there's the classic, stamping on a blockchain, or, you've seen with WorldCoin and World App, proof of humanity. Those things are pretty powerful, and using financial incentives to help prove provenance, humanity, etc. And then, another one, I can keep going on and on. There's a bunch, but I think, what we're seeing is quite a bit in terms of like programmatic and AI driven, agents. So investing strategies, money movements, procuring products, but financial markets are going to move much, much more to AI driven strategies. And so I wouldn't say we've invested a ton in that AI agent meta for crypto yet. Those markets aren't really large, but we're taking a really keen eye to saying, hey, how is this evolving? I think similar to my comment that like 7 years from now, like we won't talk about being a crypto firm. AI just blends into every single investment that we make right now.
Amazing. All right, Mike, it is time for the closing questions. All right. I know you love golf, but if you had to choose one real sport to play, which would it be?
Oh, nice. Do I have to play it? I love it.
I had to tease you there.
So I've torn my ACL twice. It would have to be basketball.
Torn your ACL playing golf or playing basketball?
No. Once playing basketball, once playing soccer. Soccer was my favorite. I can't play it anymore.
So you play not just golf, because when you tweet just about golf, so I figured this guy just only plays golf. But no, you're a sports guy. You play everything.
Yeah, I have a 7-year-old son, so as he gets older now, I'm getting back into playing it, and hopefully getting back into shape. So.
Amazing. Okay. All right. Real question now. All right. What is the best advice you've ever received?
Oh, wow. This is a funny one. So I don't know if it's the best advice I've ever received, but to give you an answer, one that's been on my mind lately, one of the best quotes I've heard that I think in crypto influences investing strategy, my understanding of markets and people's behavior, is no conflict, no interest. So meaning pay attention to, what is somebody's conflict, or, do they have a conflict? And if you follow that, you're going to figure out like what their interest and position in something is. So that's one. Another one is just, I've never received like a ton of advice like directly that I like internalize, but I just love the quote, stay humble, stay curious. And so I'm not humble, and I run into it. So I'm always trying to remind myself, like, dude, stop. Yeah. Still, like, cut it out. So that one's like one that's always like in the back of my mind. Now that's a universal one. It was at Steve Jobs. I can't remember who it was, but it's just a quote that I'm always like thinking about because it's so against, my nature. The curious one I like to think I am. And so the second part of that is the curious is I think oftentimes, and particularly now with like new tools on how to do work and business like AI, if you're not, it's easy to get lazy and just go back to the tools you've been using for 15, 20 years. And you have to stay curious. In the same way that I'm curious about crypto, I need to be curious about AI, about, politics, about global macro, like things that impact what we're all going to be doing, and just don't get lazy and complacent and take other people's takes and perspectives as your own.
That's great. I don't think Steve Jobs was that humble. So I think you're on the right track here.
Yeah, was he not humble when he said it? I probably I'm so bad at quotes.
Maybe he did, but I know that.
I think it was stay humble, stay foolish or something. So I'm horrible with quotes. I'm glad you asked that. I need to get a quote for my next. Yeah.
No, but the best founders are not humble. So like you're tracking on this great path of not being humble. So it's perfect. It's perfect. All right. What trend is totally overhyped? What trend is underhyped?
Yeah. So I would say trends that are overhyped is it's to me, it's this notion that You can't scale blockchains at the L1. I think that this notion that you need to scale, but you even see Ethereum coming back to this like a little bit over the past couple of weeks. Just the fact that you need to scale the L1, it just gets the cost of, so I think L2s are overhyped, and the cost of like fragmentation of liquidity, friction of user experience, of approvals, of knowing where your money is. Like it's just the user experience, as well as the developer experience just gets so bad so fast, as well as just the value accrual that I do believe, and we believe for a number of years, that the L1 centric approach is the right way to scale. So we'll see. I mean, very, very smart people, much smarter than me, disagree on this passionately. What's underhyped? I still think that tokenization of everything is underhyped. You're seeing a lot of skepticism and hey, it's a waste to tokenize, every idea. This, that, the other thing. I've been a big proponent. We're investors in Pump, and this notion that can launch a token. I think as we normalize creation and tokenization of things like we did with NFTs, eventually over time we'll move out of everything is speculative and needs to be traded to okay, there's just like this liquid market of value exchange. And I think that's interesting. And then underhyped is the massive unlock of as we can accrue value to those tokens, specifically, just how much of a massive unlock that will be. RWA volumes are still really, really low on chain. And I don't think people are ready for how big internet capital markets on blockchains can become when there are things of real value put on chain that can be used as collateral in these like global permissionless open systems that we can all interact with.
Very cool. All right. What is the biggest thing that you've changed your mind about throughout your history in the ecosystem?
I would say that the biggest that I've changed my mind about would probably be when I was a Bitcoin maxi when I like pre-starting the block, and I thought every other token was a scam. And I was pretty public about it and not awesome. And I think there were some elements of that being right. There were so many scams in the ICR, but now I'm on the exact opposite side of that, where I'm like, well, sure, 95% of things, don't have value. But I think the word scam is overused. And I think, that there needs to be significant experimentation and that there should be, value in tokens outside of Bitcoin. But just being a Bitcoin maxi for a number of years, I missed out on Ethereum. Like I was very anti-Ethereum from like when it launched until probably 2018.
I remember you. I remember you back in the day being the Bitcoin maxi. It was great. All right, you can now work in Web3. What would you be doing?
Yeah, I'd probably be doing something in. I'd definitely be back in general tech. Like before I founded the block, I found a company called Button with some folks. I'd probably be doing something like that. I mean, I've been in tech for 20 plus years, and I'd be like a cog in the. I'd either be a struggling or successful founder, and if I was a struggling founder, I'd probably be a cog in the machine at a big co. But I do find these tech markets so interesting, and I'd probably be at one of these like Perplexities or something like that as a senior executive in charge of, I don't know, ad sales or you name it.
Very cool. All right.
I know that's not that inspirational, by the way.
All right. Last one, Mike. What does success look like for you?
Yeah. So success is like, to me, is am I succeeding at what I'm doing? Meaning, and am I having fun effectively? And success, the way I define it is, so in investing or in building, are the companies that I'm either building or that I'm investing in having an impact on the world and creating value. So, meaning touching a bunch of folks and then, impacting them in a way that hopefully they're willing to pay or there's some value accrual. So, I can return money to my investors, I can make money, and the founders can make money. And then am I doing that in an area where I enjoy it? Like I would not enjoy many, many areas of investing, pure, SaaS investing where everything relies on, or like traditional private equity where like my first job was at Disney and I was a corp dev at M&A, and really fascinating businesses, but I was sitting in Excel models, so 10 hours a day, and it wasn't fun for me. So basically, it's just, am I succeeding in helping create value, realizing that value, and having fun?
Amazing. Mike, thank you so much. This was incredible. Where can people find more about yourself and learn more about Six Man?
Yeah, absolutely. So at MDUDAS on Twitter, my DMs are open. Some of our most successful investments have been in companies that cold DM'd us, and then we have Six Man 6THMAN .ventures. But my Twitter's just the best place. So come shout at me there.
Amazing. Thank you, Mike.
Thanks, Andrew.